Okay, so let's talk about why Melbourne, as opposed to other capital cities or opposed to regional areas. Now, there's a report that was being issued by BIS Shrapnel, and it looked at what housing prices were going to do in the capital cities over the next 3 years. We're into obviously the first year, and over the next 3 years, in total, they were saying that Melbourne and Sydney and Adelaide were going to increase 19%. Now, you can see at the current levels, the median unit price at the moment, or house price I should say, in Sydney is just over 500,000, Melbourne's 420,000, Adelaide. Look over here to Perth, the average house price in Perth is actually slightly more expensive than Melbourne, but they're only expecting a 12% increase over 3 years in Perth. Obviously, the economy and the reliance on mining industries is sort of not going to be as good as it has in the past, so that's going to come off a bit. But it's good to see, and Melbourne's pretty consistent. It consistently performs. I think 19%, that they're actually going to trot that in, really, because what's happened over the last 6-12 months, it's been quite very, very, very hot, the market. So what drives prices? It's a really important part of the presentation to understand why property as a commodity is going to go up. And we've all done economics, and when you look at what's the supply of a particular commodity, what's the demand for it, if there's demand goes up at a greater rate than supply, well, prices have got to go up. So when you look at the supply factor in the Melbourne and CBD areas such as Melbourne, Sydney, you drive around Melbourne, you drive 20 k's through Melbourne, how much spare land do you see? Not much. You don't see much spare land. There's not much spare land there. Well, if you drive through a regional area, you drive 3 k's, 4 k's through Bendigo, Geelong, Warrnambool, what do you see? Land? Kangaroos? It's been a bit harsh, but I'm from Geelong, I can say that. But it's really important that while there might be some growth in the regional areas, the issue that mitigates the supply factor is that on the outskirts they can always rezone available land and make it residential, and that's what they do a lot of the time. So when you invest in a piece of land which goes up in value, it's not the dwelling on top of it, you want scarcity over that land. So you don't want them opening up subdivisions, because a block's going to be opened up for 200,000 down 1k out, and you paid 150 for yours a while ago. That's going to have a determinant on how much yours is worth. What you want is scarcity, a lack of land. The other side of the coin is where the demand's coming from. And as I'll get into the statistics with population, it's very serious numbers in the CBD areas that the population growth forecasts, and that's driven by people that are coming into Australia. People outside CBD areas look for employment opportunities, and with the capital infrastructure mainly going around in the CBD areas, that attracts a lot of people into the areas. So it's also important to understand that what is a quality market. When you look at Melbourne and Sydney, and I'll give you an example of with Melbourne, if Fords fell over in Broadmeadows, we saw Ansett fall over years ago, the Melbourne market just absorbed it, because it's not relying on one industry, or it just absorbed it. So if Fords fell over in Melbourne, what would be happening in the Melbourne market or property prices? What do you reckon? Not much? If Fords fell over in Geelong, for example, as an example, what would happen? People would have to move out of town to find jobs, and they have to sell their properties. So they've got supply of properties on the market and people moving out. It's reliant. What you want, a definition of what a quality asset is something where factors in industries go wrong and your asset will keep going, because it's not contingent or reliant on those sort of factors. So while regional areas, they might say, oh, it's going to do well the next 2 years, 3 years. It doesn't matter about next 2 years, 3 years. What's going to do over the 20, 30 years? And because there's more risk associated with regional factors, you want a bigger return, really, but you don't get it. So a quality asset is mainly in the CBD areas. So let's have a look at this statistic with population growth in where all the people coming from. This Victorian government issued this what they call it the 2030 plan in 2000. They actually forecast Melbourne's population was going to go from 3.5 million, or just under 3.5 million, to 4.4 million over the next 30 years. So here we are now, about here. They expected the population to be about 3.75 million. In 2009, Australia's population reached $4 million, 4 million people here. So 9 years, they expected to get to 4 million in 2018, but we got there in 2009. They only stuffed up by 9 years. So that's a lot of people moving in there. There's not even 1 million people in Adelaide. You know, over the next 40 years, Melbourne's population is going to go from 4 million to 7 million. So pretty scary figures. Based on what's required over the next 20 years, Melbourne needs an extra 30,000 properties, units and houses a year. They're estimating 600,000 dwellings over the next 20 years, which is 30,000 a year. Some other factors just to touch on. There used to be 2 people living in a household. Now it's down to 1.6. People living on their own longer, divorces, whatever, people living longer before they go into retirement villages. They need more houses for the same amount of people. These days people want low maintenance properties. The younger person these days, it's going to be very hard for them to get their own home, so they're destined to rent all their life, and a lot of people are just happy to do that. So there's a lot of extra factors actually contributing on the shortage supply. Overall statistics, this is the bottom line, is what's driving house prices, is our population is just increasing at a fundamental rate. Let's have a look at a summary of things. World population going to 9 million over the next 40 years. Australia's population going up 13 million, of which Melbourne's population is going up 3 million of that 13 million. It's interesting to know, last year 1.3 million people applied to come into the country. They only let 180,000 in. All the boat people got turned around funnily enough. But you have to have skills and dollars to actually get into the country. They let the doctors and all that, or where the skill shortages are, they let them into the country. 180,000 out of 1.3 million. 1.3 million keep applying to come into Australia, and we've got a skill shortage. That figure's not going to go backwards, 180,000. It's going to keep increasing, and that's fantastic for property investors. You've got more people coming in, and these people either rent properties or buy properties. And just some regional statistics, just to show that obviously the population increase is significantly less, and there's normally enough supply of land to cater for that increase, and that doesn't help with property prices accelerating at the same rate as CBD areas. So specifically with Melbourne, of the 180,000 people that came into Australia last year, 45 went to Sydney, 55 went to Melbourne, and 80,000 went elsewhere. A really important point that when Melbourne increased 75,000 people last year and the year before, which was about 200 people different in numbers, it was bizarre how close the numbers were, 75,000 people, 55 come from overseas and come and lived in Melbourne. The other 20,000 was a net increase from the other factors. So, and over the next 40 years, if Melbourne population is going up 3 million, that's 75,000 a year over the next 30 years, being 3 million. So the last 2 years, 1,500 people a week is going to continue over the next 40 years. I don't know really where we're going to put them all. I've got a good idea, which I'll cover later on. So Melbourne's population needs 30,000 houses a year, units and houses. We can only supply 22,000 on a good year. Fundamentally, we're 8,000 properties short a year in Melbourne on a good year. They can only build so many, and we're continually short each year. and that's why prices go up, because there's a shortage on demand and supply.